G'day MegaWhale team and welcome back to the channel. I hope you're all having a fantastic day. In today's video we are doing a complete macro and short-term analysis discussing the recent weekly candle close, the breakdown of the major 62.09 on the weekly RSI, the loss of the horizontal low on the daily consolidation resulting in a short-term correction now into our prior break of structure at 110,000, the possibility for further continuations down, and even the short-term price action discussing how the price is developing on the hourly. Will Bitcoin bounce from here, or are we destined to see lower prices? If so, where will we go? We'll also be taking a look at the total cryptocurrency market cap and the altcoin market, as both of these charts are testing major levels of support. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure, raw TA. If that is the kind of content you are interested in, you can also join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. And if you were interested in joining our VIP channel, you can do that by clicking the pinned comment of the free channel, contacting our admin, checking out a 54+ month trading track record, or watching a 10-minute video inside the channel. You can go ahead and find out more information by clicking those links. Of course, we've got access to two channels: the main VIP channel where we post setups, entries, targets, stop losses, trade justification, exclusive analysis, and our community group chats with our general chat, our trading chat, education chat, coding chat, news, help, community setup chat, and of course everything you need to stay in loop with the markets. Check it out, join up, let's jump into the content. Taking a look at Bitcoin, we of course seen a few things happen over the last few days. We had a weekly candle close which was bearish. We had a bearish weekly candle close resulting in the loss of the major 62.09 level, indicating a macro momentum shift is underway, moving downward. And this historically, more times than not, out of the 11 times now over the last 10 years, we have seen 9 of those instances resulting in corrections larger than 10%. And a 10% pullback from the opening price of this weekly candle has the potential to take Bitcoin closer to that $100,000 mark. So the risk of continuation is lower, and this continued downtrend is very much present according to this indicator. If we're looking at the short term, we have now seen a daily candle coming up to a daily candle close in 40 minutes, and this is very likely to occur underneath the horizontal low at 112,000 to 111.9, a level we've been discussing over the last few days. We'll discuss that more in today's video, but as we know, the loss of the horizontal low would indicate that absorption was not going forward. The buyers were unable to absorb the selling pressure, and this will likely trigger a continuation into lower supports, the first of which, that $110,000 level, is being tested as we speak. Also, the total cryptocurrency market cap having the potential negative momentum shift coming, red dot currently are on the market side of B. Overall, looking relatively weak, and the altcoin market retesting 1 trillion. A lot to take a look at. Let's get stuck into the data. Taking a look at the 24-hour volume, that is 76.4% in the green, 433 billion liquidations following upwards with a surge in volume, of course, 667 million, 347% upward over 24 hours. Looking at our 24-hour liquidations, a whole massive amount of those liquidations coming from long positions. 815 million coming from longs over here, 85 million coming from shorts. Looking at the spread here, a lot of that still coming from Ethereum, and the second highest being Bitcoin. Let's go over to the S&P 500 and the DXY. The DXY hanging on by a thread still above the uptrend. While we remain above this weekly uptrend, the DXY does have a chance to push back into the change of character levels, this cluster of resistance between this 99.6 and 100 level on the DXY, breaking through that resistance will result in stronger continuations upwards to 103, but provided we remain under the horizontal resistance at 99.6 to 100, we will expect continuations down to 92 to 93 on the macro, provided we see interest rates drop. Okay, if we see interest rates drop, the sooner we will likely see the DXY move down. The S&P 500 struggling a little bit, doing much better than the cryptocurrency market, however, but not above the prior high. If we take a look at this price action, we do still have some warning signs, of course. This major uptrend spanning back since mid-May, hanging on, holding on over here as a consequence to that Jackson Hole speech by Jerome Powell, alluding to potential interest rate cuts in September, the market pricing that in and bouncing at that support. If we do drop below this level, we are expecting corrections into 6,250, and of course we know this to be our major support, where if we lose, we expect strong corrections, potentially as low as 5,800 for a bottom there and then a reversal on the higher time frame. That would be absolute worst case scenario for the S&P 500. Best case scenario for the S&P 500, we need to at least manage to hold above this uptrend long enough to facilitate a breakthrough this week high. If we can break 6,500, we will see continuations upward. We will see the next leg up again. We are going to be apexing against 6,500 pretty soon, provided we hold the trajectory of this uptrend. It is an inevitability that we retest it. So we're coming close to a decision over here. This is looking around about the first week of September. So I'd say in the next 7 or so days, we will likely see a break of this local high or a loss of the uptrend, which will give us a clear expectation for at least the first 2 weeks of September moving into interest rates where we expect the price action to move to. That is it, guys. Let's jump into Bitcoin. Now, before we do, make sure to go ahead and sign up to BitGet, BitUnix, and BingX. The exchange links are down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume. You'll go to support me making this content for you guys on a daily basis. It's the best way to support the channel. And of course, you'll be trading on exchanges I use and I trust. And most importantly, you'll also get access to not only those discounts, but every exclusive promotion we run on BitUnix specifically on a monthly basis. Go ahead and check it out, play ad, and we'll get back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other 2 exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and jump back into it now. Obviously, we weren't here yesterday to do a video for the weekly close because we're out playing golf, but we're here today, and let's recap what happened. So the weekly candle close was bearish. It was by all accounts bearish across all of our charts. Bitcoin, the total market cap, the altcoin market cap, we did not see good weekly candle closes. Now, starting on the total market cap and altcoin market, the weekly candle close was unable to break through that major point of resistance at 3.95 trillion. That little horizontal level you see here on the chart, that is the horizontal point we need to clear on the weekly chart to signify that absorption has taken place and the buyers are ready to push the price back up. We have not yet seen that. We have failed to see that in this weekly close. And as a consequence to the price now dropping during the week, we've already seen over the last, what is this, day already since the weekly close, about a 5% correction for the total market cap, resulting in not only this red dot print here on the market side of B, which is essentially suggesting weakening positive momentum, right? It tells us the momentum is still positive, but it is aggressively weakening. And we are seeing here in the RSI dropping below the uptrend, which is a sign of a negative momentum shift. And of course, for that to be confirmed, we need a weekly close on the RSI below. So we have weakening positive momentum represented by the red dot, which is a derivative of the fact that price action has failed to absorb the selling pressure, closing a weekly candle yet again below the key level of resistance, resulting in a 5% correction. And then the RSI signaling to us that that weakening positive momentum is actually spilling over to the point at which we are seeing a negative momentum shift here on the weekly, which does spell disaster for the market if it cannot avoid these things. It increases the potential for the loss of this major uptrend we have been above now since April 2025. And now the total market cap has yet to have this negative shift. It is yet to break this uptrend. But when we look at something like Bitcoin, we saw the loss of this uptrend and the negative momentum shift weeks ago. And again, we discussed why that is the case, and we'll briefly touch on that now. And that is because if we're looking at Bitcoin dominance for the most part has been falling, and the reason dominance has been falling with the total market cap rising is because we've seen the altcoin market and Ethereum hold relatively well against Bitcoin pairs as a consequence to more optimism in the market, more hope for a potential alt season, and even those interest rate that notice for interest rate cuts propped up the market a little. Anytime we see more hope, more euphoria, more optimism in the market, we see the more speculative assets hold and rally better. And that is why we have seen, again, the total cryptocurrency market cap hold relatively well against when we're comparing to the Bitcoin chart. So risk factors here, guys, we see negative momentum shifts extend into the weekly close here, and we lose 3.65 trillion, it is very likely we will see extended corrections down at least to the 50 EMA, potentially into 3.5 trillion as a target, and of course, worst case, into 3 trillion sell side liquidity. Those will be our bearish targets if we see this correction continue into the weekly close. Now, as we mentioned, for the buyers to come back in, we need that weekly close above 3.95 trillion. Let's jump over to the altcoin market, then we'll go to Bitcoin's weekly chart. The altcoin market saw a weekly close. Now, it was good and it was bad, and let's talk about what that means. We finally saw a weekly close above 1.06 trillion. However, we saw a bearish divergence with that close. So it tells us that we have broken through the level, but we have broken out with weakness. And anytime we see breakouts of weakness, the potential for those breakouts to be false breakouts or failed breakouts dramatically increase. And that is why we have seen, again, the price action not sustain or not maintain above that level of resistance, resulting in corrections back to 1 trillion. So a bad weekly close for the altcoin market. If we're looking at the short term here, we are correcting back to 1 trillion, which is a major support. So we do have the potential for maybe short-term bounces for Bitcoin, short-term bounces for Ethereum over here in altcoins, which we'll discuss in our short-term analysis. But overall, we are seeing here, with 30 minutes left on the daily close, the potential risk for a close underneath this multi-week uptrend spanning back from June. So not looking fantastic either. Let's jump over to Bitcoin now, taking a look at the weekly. So, of course, as you guys have known, I've been bearish on Bitcoin for a few weeks now. We actually turned bearish on Bitcoin, officially expecting corrections for Bitcoin. Upon the loss of our break of structure at 122.3, we turned bearish. Our first target was a correction into the uptrend. Our second target was a correction into the range low. And the loss of the range low, we had subsequent targets of 110,000, which is now being reached. And we'll discuss our rest of our targets soon. This entire time, we've told you these bounces are good, but we need to break higher to tell us the buyers are back in control. And we've just seen this trend continue down, which is exactly what the momentum has been telling us on the short and higher time frames. But when we're looking at the weekly chart, we have seen something very bad happen. And that is the weekly candle close below the 62.09. Now, we'll talk about the probabilities in a second, but I want to show you a pattern that has spanned back since the entirety of this bull run. So since 32,000, what we have seen since 32,000 is every time we drop below the 62.09 of marked out by this red vertical raise, we have seen corrections to the 50 EMA and the Gaussian channel upper band. So already we run the risk of repeating that fractal, which is a correction to the 50 EMA and Gaussian channel, which if we extend forward into this 6th of October point, which we'll discuss in a second, that is going to take us to 100,000 to 98,000. So we do have the risk of corrections into 100,000 to 98,000 sell-side liquidity based on the loss of the 62.09 on the RSI, which we have seen happen and confirm yesterday. If we're looking at the probabilities and we're looking at what we have seen historically, this chart shows us over the last, we're looking at nearly 10 years over here, every single breakdown of the 62.09 on the weekly, we have had two instances. Instance number 1 here and instance number 2 here, where corrections did take place, but were not greater than negative 10%. So every single time we have seen corrections, but not every time we have seen large corrections. So we've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 times now. It's been 11 times, and we've had 9 out of the 11 resulting corrections that have been greater than negative 10% or negative 10%. So statistically, there's a very strong chance of continued corrections down for Bitcoin just based on that fact. Now, this doesn't mean there will be a correction, right? Trading isn't really black and white. It's nuanced, it's discretionary based. Just because we have seen something play out with a massive statistical probability in its favor before doesn't mean it's going to continue forever. So we could see, another failure. We could see a failure again. But if we're looking at all the confidence we have, the probabilities do start stacking in its favor for a continued correction. So that is definitely something we need to pay attention to at the least. Let's talk about that a bit more now. Let's go to the daily chart. So on the daily chart, we have seen a few things happen. And I want to bring up another indicator here, which is the Gaussian channel. And the Gaussian channel has been a pretty good indicator to represent overall direction of the market on a higher time frame. It's not very good on the short term, but when we're going to the weekly, particularly the weekly, is fantastic. But when we're going to something like the daily, it can also be used with a pretty good degree of accuracy, not to predict targets, but to predict overall direction and the strength of those moves. So generally what happens when we break into the Gaussian channel from the top side down on the daily, which we talked about already when that happened, we see corrections below the lower band. We saw, again, instances where we do not have those corrections, but generally we see corrections below the lower band, with of course the midline being a first target. We have now actually broken below the lower band on the daily. This is also something to be concerned about, because through the entirety of this uptrend, this diagonal trend line, we have been sitting above the Gaussian channel, right? We've been sitting above the Gaussian channel, at least above the lower band of the channel. So breaking below the lower band of the channel here, breaking below the uptrend, is representing high time frame weakness in this trend, which could spill over into further corrections. Removing the Gaussian channel, we can see already that the recent rally through the interest rate news did not even result in the price breaking the midline of the channel or that uptrending resistance. So that was actually a support resistance flip, and we have taken out the change of character, broken back below these lows, signifying the trend is still very much in a downward trajectory. So for the buyers to step back in, for us to see any hope over here of reversals, at least on the short term, we need to see the daily candle get back above 111.9 to 112,000. This low of the channel, we need to reclaim that level to signify, again, this was a potential local bottom and we are pushing back upwards. If that does not happen, the worst case scenario for this, based on the measured move of the horizontal consolidation, would be a correction into 100,000 to 98,000, yet again confirming the potential negative 10% correction on the 62.09 RSI. That would also take us into our sell side liquidity at 98 to 100,000, which is smack bang right over here as a potential bottom point for Bitcoin before we see a reversal. That is worst case scenario. Let's zoom into potential shorter time frames and discuss targets. So assuming we continue below this horizontal support, where are the next support levels for Bitcoin? Very, very important, and very clearly, we have got a few major supports. Number one, we have got the 110 to 106,000 support. That is a support we are currently challenging. Number 2, we have got the 105,000 US dollar point of support. Again, a very interesting point of support, and a point of support we will need to remain above. We have seen here a potential, this was a local bottom here for Bitcoin before we then saw a continuation upwards. So again, prior points of support are also future points of support. These are points of interest. We have seen reactionary directional shifts at this point, so we expect equal or similar reactions at that level in the future. And then of course, losing that level, we expect to see 100 to 98,000, which is testing that sell side liquidity. So you can see we've got a few major supports below us on the higher time frame. And if we're looking for continuations back up, we've got a few major levels of resistance we need to break above. And we're looking at the overall trend here, guys. We're looking at the trajectory of the market. The trend is bearish. The trend is down now. We are in a downtrend. We've been in a downtrend ever since the failure to sustain above that buy side liquidity. And that downtrend is beginning to show signs of increasing bearish volatility. And of course, momentum shifts on the weekly. We've talked about what needs to happen for the buyers to get back in control. First, we need to see a daily close above the change of character. That needs to happen. We can't even talk about buyers actually sustaining any sort of uptrends until that occurs. So if we see a small bounce over here, fantastic. We could see that, and then just a correction. We need to see more than just some green candles to be sure that the buyers are in control. A lot of people got trapped over here. So they saw a green candle and they thought, well, that must be the end of the downtrend, but they weren't paying attention to the key levels. They completely forgot that just because the market is green, it doesn't mean it's bullish. Just because the market is red, it doesn't mean it's bearish. Context absolutely matters when we're looking at trends. And at the moment, the trend is still bearish, but it is moving into points of support where short-term selling pressure could dissipate, and we could see some short-term reversals. Will those short-term reversals indicate that buyers are in control? Absolutely not. Not if they do not sustain. So we need to see some sustained buying pressure that pushes the price at least above 112,000 into the new week, ideally 118,000 for the buyers to be fully back in control. Otherwise, we do run the risk of continued corrections. Now, I want to make it abundantly clear to everyone, I do not believe we are going to see just one big old red candle down. I know a lot of people hear the word correction, they expect that. If we're looking at the VRPV, we can see we have more or less cleared this lower historical resistance range, which means a lot of the volatility is probably dissipated now unless we see external news events. In fact, it is more likely we see some degree of a grind downwards, a slower grind downwards into these points of support than just these flash wicks or these large one-day red candles that we have seen over the past 2 weeks. And that is basically just what the VRPV suggests, okay? I want to quickly finish up the video discussing the immediate short term as we have now approached and tested that $110,000 support. So jumping into something like an hourly chart, we can start to see a little bit of weakening bearish pressure. We are seeing again bullish divergences develop here on the RSI. We are seeing on the immediate short term, such as the 15-30 minutes, a little bit of the price action pushing up into these moving averages and then squeezing back down. So we're seeing this compression with the moving averages, particularly here on the 5 minutes, which is generally a sign of decreasing selling volatility, which is also a sign that buyers are either stepping back in slightly or sellers are starting to dissipate. So if we see this continue onto the short term and continue through the short term, there is a chance we actually see some short-term reversals develop here on the short term that potentially does push Bitcoin back as high as this 111,800 to potentially 112,000 resistance. That is best case scenario. Of course, losing this local low will then also continue that downtrend lower. So watching the short term here for potential reversals, a loss of the local low will be the trigger for continuations down, looking 108,000, looking 105,000, whereas the short term does have a chance for reversals. We do have a little bit of resistance to the break of structure around 110,600. If we clear that level, it is expected to see those continuations on the short term upwards into 111.9, 112. But for the bulls to fully get back in control, we have a lot of horizontal resistances we need to clear before we can even discuss that. That is just a first step in what will be a pretty painful journey upwards if we start to see that happen. So pay attention to those levels. We'll wrap up the video. Thank you for tuning in. I'll catch you guys on the next one on Thursday. See you then. Bye.